We are here as Kenyans giving our asset for a song when the buyers on the other side, they are being treated like kings for getting a good deal and of course for taking advantage of our incompetence as a country.
We have got the best value out of this transaction, in my view.
Who owns Safaricom? Safaricom is not owned by one person. It is owned by shareholders. Vodacom owns 40%, the government of Kenya owns 35%, and the remaining 25% is owned by the public, including individual investors, pension funds, insurance companies, and other institutions. How did the government own Safaricom shares? Safaricom did not start as a private company. It began as a department inside Kenya Posts and Telecommunications Corporation, KPTC, a 100% government-owned parastatal. Since KPTC was owned by the government, everything under it, including Safaricom, belonged to the government. In 2000, Safaricom was separated from KPTC and incorporated as Safaricom Limited. Safaricom stopped being just a department inside KPTC, a government company, and became its own company called Safaricom Limited. When that happened, the government of Kenya took 60% because Safaricom came from a government office. Vodafone from the UK took 40% to help run and grow the business. This was the first time Safaricom shares were created. Since Safaricom started in government hands, the government automatically became a shareholder. In 2008, Safaricom was put on the Nairobi Stock Exchange, meaning ordinary Kenyans were allowed to buy Safaricom shares for the first time. What happened? The government sold some of its Safaricom shares to public. After that, the government kept 35%. Vodafone, now Vodacom, kept 40%, and the remaining shares went to ordinary Kenyans and big institutions, and that is how it has remained till now. Why is government of Kenya selling its shares? The government of Kenya is facing 1. Huge public debt. 2. Budget deficits. 3. Pressure to fund projects without raising taxes or borrowing more. To address this, the Treasury started looking at state assets that could be converted into cash. That's where Safaricom comes in. The Treasury saw it was good to sell Safaricom shares because number 1, they are easy to sell. Number 2, there is a ready buyer. The intended buyer is Vodacom Group through Vodafone Kenya Limited. If this deal goes through, Vodacom will own 55% of Safaricom shares, giving them control of the company since they already own 40%. And the sale price is 34 shillings per share. The transaction is expected to raise roughly 204.3 billion shillings from the share sale, with a total projected mobilization of about 244.5 billion shillings. This would rank as one of Kenya's largest single equity transactions ever. However, the plan has faced strong opposition. Kiharu, Member of Parliament and economist Ndindi Nyoro, has sharply criticized the proposal. He says, number 1, the government is selling because it is broke, not because it is smart. He says this sale is driven by desperation to raise quick cash, not by a long-term plan. Selling assets under pressure usually leads to bad deals. Number 2, Safaricom shares are being sold at a low price compared to their true value. He says this means Kenya is giving away a valuable asset for less than it is worth. Number 3, not an open or competitive sale. He says selling to a limited buyer instead of open bidding increases the risk of undervaluation and cheap disposal. Number 4, short-term cash, long-term loss. Nyoro compares this to selling land or a house below market value just to pay bills. The problem is solved today, but the asset is gone forever. Number 5, Safaricom is not just a business. Its infrastructure, M-Pesa, mobile connectivity, and data systems affect the entire economy. Nyoro says the government should be careful reducing its stake in such a strategic company. Number 6, lack of transparency. He questions why the sale is being pushed quickly and quietly instead of being openly discussed with Kenyans and Parliament.
The investor who is coming in is an investor who is not new, already holds 40%. Right. And this 15% is giving them 55%. And that allows them to take some more risk, as opposed to if you were to invite another investor who is going to hold only 15%.
There is something called information symmetry. We are selling our stake of 15% to a company who is already inside Safaricom, who are already having board members. Definitely, they already have a step ahead of any other person who would think of buying our stake because of the information asymmetry.
this investor who would give you a very high price beyond the market price.
When you give forth a competitive process, you get people competing for your asset. The language of a buyer. When I want to buy something and I start talking about the market, that is the language of the buyer, not the seller. And that is where I see a problem is.
Giving it to an investor who already has 40% would allow you space to take advantage and leverage on the benefits of understanding the business environment and the benefits of having higher shareholding in the company. And that is why we realized that if we took this to the market as they are proposing, and by the way, competition is not a guarantee that you will get the best. In fact, competition may give you the least.
If you check when the directors of Vodafone, their group now, they are called Vodacom, called for a press conference, they were very upbeat about the transaction. In Kenya, the way we are asking for information, you realize here most of the information we actually got it from the buyers. Most of the information was volunteered by the buyer. So when they went back to SA and they called the press, one of the people there actually commended the directors for getting such a good deal. So we are here as Kenyans giving our asset for a song when the buyers on the other side, they are being treated like kings for getting a good deal and of course for taking advantage of our incompetence as a country.
We have got the best value out of this transaction, in my view.
It will be a tragedy for Kenya to value this transaction based on the market. Beyond the market, can we get the government of Kenya, when they conceptualized this issue of selling our stake, which valuation methods did they employ? Who did they hire to do the valuation? When did they hire those people?
The transaction advisor here was KCB Capital. And we all know who Kenya Commercial Bank is. So which is this monkey business that is trying to purport?
I heard about KCB and a framework contract. I would want to see that framework contract. You come and bombard the market with information, and then immediately you're already announcing the price. So who determined that price?
I thought Ndindi Nyoro is someone who has been investing in the Nairobi Securities Exchange. I have seen him make a few coins here and there in Kenya Power and Lighting. He should remember that if we did not privatize Kenya Power and Lighting, he would have not made the money that he made. So, and I don't know why he's stopping other Kenyans. I think he has been rich. He has made his riches. He doesn't want other Kenyans to make their money.
The guys who are buying us, the best their PE ratio has been is 40. The best. The recent one is negative because at the group level, they are making losses. So that's why they went for a celebration after leaving Kenya, because they knew based on that parameter alone, they are buying us. They are actually getting us for free.
Let's treat what Ndindi Nyoro is saying simply as politics.
From where I sit as Ndindi Nyoro, I don't talk about these things in terms of politics. From this platform, respectively, tell my brother Honorable Mbadi, I have taken up the challenge. When you are ready, I am ready, and in a TV station of your choice.
I don't fear addressing Ndindi Nyoro. He is my junior. I know he went to KU and did some, I don't know what he did, but which he got in same year. I'm wondering how you can read for Thomas Azimanyi.
And as you come with all the stakeholders, come with all the stakeholders involved in the sale of Safaricom.